Hi, and welcome to another business snippet presented by Mound Ridge Consulting. My name is TJ Plyler, President of Mound Ridge Consulting, and I'll be your host. In this business snippet, we'll talk about our Finance for the Non-Financial Manager program. In this finance course, we take your financials and key performance measures and layer them onto your key business processes, strategy, capital, budgets, and talent management. This provides your management team with an in-depth understanding of your business processes and what it takes for you to be financially successful. So what's the value? Grounding senior managers in your financial basics and the key business processes provides a strategic perspective. Business decisions made from a strategic perspective add more value than decisions made from a functional perspective. It also starts to build the understanding for the need for teamwork as well as strategic and organizational alignment. It supports executive development. One approach is to have your team complete the finance course, which is followed by assessments and then individual or team development plans. Another is to use this course as preparation for strategy sessions. Imagine how much more robust your strategic planning sessions would be if your management team had just completed in-depth discussions about your business processes and your key performance measures. So what's the agenda? We'll talk about why we measure financial performance, and then how do we measure financial performance, starting with financial statement basics, moving on to key performance measures. Then we'll talk about layering the financials onto your key business processes using the business cycle. So why do we measure financial success? Because it's the key measure of success. There's an external need. Owners want to know because it drives shareholder or owner value. Creditors want to know because they need to determine whether or not to lend money to companies, and if so, what are the associated risks. There's an internal need from employees because it directly impacts their standard of living and career opportunities. And managers need to know from a strategic planning and business decision-making perspective. So, how do we measure financial performance? We'll start by talking about three key financial statements. There's others, but these are the three most common. There's a balance sheet, the income statement, and the statement of cash flows. On the balance sheet, we have three key components: assets, liabilities, and owner's equity. The assets are what the company owns and uses to generate revenue or income. The liabilities are what the company owes, typically in the form of debt. And finally, owner's equity is shareholder or owner investment in the company. The balance sheet tells us the total dollar value of the assets or capital available to the company's management team and how those assets were financed through either liabilities or owner's equity. Next is the income statement, also known as the P&L or profit and loss statement. There's three key components to the income statement: revenues, expenses, and net income. Revenue is money received for products and services. Expenses are all of the dollars spent to generate sales revenue. And net income or earnings is revenue minus expenses, or what's left over, the basic profitability of the company. And finally, the statement of cash flows. There's three types of cash flow on this statement. Cash flow from operating activities, which is cash flows generated by daily operations of the business. Cash flow from investing activities, typically investments in assets or mergers and acquisitions. And cash flow from financing activities, which involve cash flows that finance capital used by the company. The statement of cash flows is an important financial statement because it tells us how the company generates and uses cash. Key performance measures. There are several levels of profitability, all contained on the income statement. We have ratios. One example is ROA, return on assets. It takes profitability from the income statement and compares it to the total dollar value of assets on the balance sheet. And there's many other ratios we can look at as well. There's several year-over-year trends, such as sales revenue, expenses, marketing budgets, etc., and others. In this course, we customize the key performance measures section so they focus on your key performance measures. In summary, the Finance for Non-Financial Manager training level sets an understanding of your business among your senior executives. It provides strategic perspective, and it garners support for efforts through understanding. When employees have a better appreciation of the effort and analysis that goes into strategic plans, they're much more likely to come on board and support those efforts. That concludes this business snippet. I want to thank you for tuning in again. My name is TJ Plyler. Please contact me, tj@moundridgeconsulting.com, or check out our website, www.moundridgeconsulting.com. Thanks, and have a great day.